Hi everyone, this is Raluca here with the entire Electrica management team. We'd like to thank you for joining us for the Q1 2025 financial results presentation. Those of you who are connected only by phone, you can download the presentation on our website under the results and presentations section. You can find more details than we will present here. We will present here the financial results. For anything else, you have a lot of pages to look through. The participants connected online can address written questions on the live webcast or can intervene live on the Q&A session at the end. Please kindly note that since the entire conference is being recorded, all participants will be in a listen-only mode, so the attendees' voices will be disabled. Should anyone need assistance during the conference call, please signal an operator by pressing star and 0 on your telephone. We'll publish the recorded presentation on our website latest tomorrow, most probably tonight, and the transcript as well as soon as possible in Romanian and English. Now we'll begin the presentation, and which, as I said, will be followed by a questions and answers session at the end. At this time, I would like to turn the conference over to our CEO, Mr. Alexandru Chiriță. Thank you.
Thank you, Raluca. Dear ladies and gentlemen, thank you for joining us. On behalf of the Electrica team, welcome you to the presentation of the results for the first quarter of 2025. The results for the first quarter of 2025 confirm the resilience of our business model and Electrica's ability to perform in a complex economic and operational environment. The solid growth in EBITDA and net profit is mainly supported by the contribution of the distribution segment as well as by the balanced performance across all our business lines. At the same time, we are accelerating investments in infrastructure and renewable energy projects with the clear objective of strengthening our position as a key player in Romania's energy transition. I am confident that our operational discipline, long-term vision, and the professionalism of my colleagues will enable us to deliver sustainable value to all stakeholders and contribute to building a secure and green energy future for Romania. The first quarter of IFRS consolidated net profit is RON 195.7 million, 53.2% more than the one in the first quarter of last year. The data for this quarter reached RON 459.3 million, increasing therefore by almost 15%, again mainly due to the operational performance of the distribution segment, and the operational profit increased about 25% compared to last year's first quarter, reaching RON 313 million, reflecting effective management and strategic marketing positioning. We managed to perform the investments in the network that we targeted in this first quarter for the benefit of our nearly 4 million network users. I believe this shows the effectiveness of our strategy and our team's determination to strengthen the company's position in the energy sector. On the supply side, we remain cautiously optimistic and prudent in this transitional period for market liberalization, trying to solve the challenges ahead and take advantage of the opportunities. Operationally, our distribution segment recorded yet again a notable performance with a 14.8% increase in revenues driven by higher distribution tariffs and increased distributed volumes by 4.6% compared to the previous period. In the supply segment, revenues increased this quarter by approximately RON 203 million compared to the same period last year. This is due mainly to an increase in volume supplied on the retail market by 3.7%. Higher subsidy revenues due to increased purchase costs and regulatory adjustments regarding subsidies calculations. I remind you that our sustained efforts to strengthen the financial position of the group were appreciated by the Fitch Ratings Agency, who at the end of March this year improved the outlook of our rating from negative to stable, one notch above the sovereign rating. Since we last met, another crucial step was taken in our strategy for financial consolidation, for optimizing the structure of the group, and for ensuring the stability of our current and future operations. At the end of April, we signed a RON 3.1 billion syndicated loan, which includes a credit facility intended to finance eligible green projects and support a sustainable business model. This loan will be used to partially refinance existing bank exposures, support infrastructure investment plans, and develop a renewable energy portfolio meant to contribute to Romania's energy sustainability. Electrica continues to prioritize investment in renewable energy projects, having approximately 300 megawatts capacity in various stages of development. We also remain actively involved in securing non-reimbursable funds to support the strategic objectives and enhance the sustainability of our growth. As to our renewables production, for the two photovoltaic parks, Satu Mare 3 and Bihor 1, with a total capacity of 136 megawatts, we are very close to signing the EPC contract, and we already have submitted requests for funding to the modernization fund. The investment value for the two projects is around 87.5 million euros. In February this year, our shareholders approved an investment of 263 million euro for Crucea Wind Park, around 121 megawatts capacity, and we are working on the EPC tender. We'd like to remind you that this project has been designated among the winners of the first round of the auction for the state aid scheme in the form of contract certificates. Satu Mare 2 photovoltaic park of 37 megawatts is close to entering the testing phase. The EPC tender for our storage project in Fântânele should start soon as well. Looking ahead, we hold a positive outlook for 2025 and we are committed to exceeding expectations with regards to our results and investment objectives. Investments in network infrastructure, digitalization, renewables production, and improvement of our internal processes remain our highest priorities. We firmly believe our strategy will bring added value to shareholders, investors, and partners, paving the way for sustainable and robust long-term growth. I will now pass the presentation to our CFO, Stefan, who will provide detailed insights into our financial performance. At the end of our presentation, we invite you to actively participate and address any questions you may have. Your insights and perspectives are highly valued. Thank you. Stefan?
Thank you, Alexandru. Thank you, ladies and gentlemen, for attending our conference. I'll make a deeper dive in the numbers and try to explain the drivers for the evolution of the profitability. And I will ask my colleagues to go to the first slide of summary of financials, which is slide 12, and I will speak a little bit here to explain the evolution of quarter 1 2025 versus quarter 1 2024. In terms of revenues, we had an increase of revenues, which is driven by increase of distributed energy in the gas segment, 8%, increase of tariffs for distribution with 5%, and also an increase supplied energy in the supply segment of 3.7%. This translated in profitability in terms of both EBITDA and net result compared with previous year. At the level of the indebtedness, you can see the level is pretty much stabilized. We are in the context in which we expect for the future to have a decrease of the level of indebtedness following the end of the support scheme. You could see later on also in terms of evolution of indebtedness for the supply, that this is decreasing. In terms of PSL, for sure, we'll have new going for loans because we have the CapEx plan to be developed along with the regulatory period. Moving to the next slide, please, slide number 13. We have the evolution of the consolidated EBITDA and net result. Basically, compared with the result of last year, we had an improvement in energy margin of 78%, which had been mostly the result of 100 million improved margin on the supply segment. We had here 200 million RON positive impact from the increased tariffs and increased distributed energy, compensated partially by 105 million increase in expenses with network losses, difference of price for network losses. If you do not compare with quarter 1 2024, we had at the time the mechanism of MACE, centralized acquisition functioning. After 1st of April 2024, MACE became optional, and basically in a couple of months was not significant anymore. But in this quarter, we had the context of purchasing the energy from the market. In terms of the margin for the supply business, we have a positive effect related to the increase of the energy supply to the customers, 3.7%, which was a positive effect related to the increase in the revenues due to the higher TV revenues. With quarter 1 2024 related to the change of the tariff plan. And then we had a negative impact, which was compensating for the positive effect, and in fact, generating a minor negative effect, minus 22 million, which is related to the increase in the energy prices on the market. Another element to be mentioned is the evolution in OPEX. Had an increase in OPEX of 26 million, which was mostly deriving from personal expenses related to the distribution subsidiary. Also, we had some increases of repairs and maintenance in the distribution and service segment. And then a positive effect partially compensating that from the spread due to the decrease in the expenses with penalties. Most of the evolution of the net result is explained by the evolution of the EBITDA. So we have 68 million increased profit in quarter 1 2025 compared with quarter 1 2024, mainly for the evolution of the EBITDA. We have minor variances in terms of depreciation and profit tax expenses. Moving then to the next slide and describing the situation for the business lines. In terms of distribution segment, you have here the summary, including the part related to the increase of revenues and overall margin, with the net loss cost increased by 105 million. We have explained already this. What is to be mentioned here is that we have net debt evolution, which is covered in a graphic form in the next slide, increased with 278 million in the context of increasing of bank loans, but with the change of the structure, with having more on long-term loans and less overdraft loans. This is aligned with accessing the loans which are needed for financing the capex plan of the distribution subsidiaries. Moving on to the next slide, you have as a reminder the composition of the regulated risk asset base, of the remuneration of the regulated asset base analysis for the distribution segment, starting from the RAB and then getting to the gross results as a split analysis for the level of the year. By giving you this, so that you have a perspective to the next slide, which was previously explained, we cannot really split this into quarters, as this is it cannot be really mapped on the amounts agreed with ANRE. But going to the next slide, you have the quarter 1 result going from the revenue to the IFRS results of 2035 and going through the regulated result, then making adjustments with the differences between accounting depreciation and regulated depreciation in order to get the operating result, then financial results and the result of statutory. And then with the adjustment to IFRS, final results of IFRS of 214 million, which is the main driver of our profitability at the consolidated level. If we move on to the next slide, you have right here the summary related to the numbers for the distribution segment in terms of distribution price evolution of the volumes. Also, we should mention that for quarter 1 2025, we are having realization of CapEx of 137% compared with the annual plan, and also compared with the budget. To detail also this is the first part. This budget, we are at 100% budgeted CapEx for the quarter one. I remember, I would like to remind you that basically compared with annual CapEx, in our CapEx plan, we have also additional amounts included for the network asset works that can appear during the year, in addition to our regular CapEx plan. Then moving on to the next slide, here you have these details about evolution of the CapEx plan, and then you have also some details about the evolution of the price of energy and the increase of price of energy 2024, related to the fact that in quarter one 2024 we had the benefit of market electricity mechanism purchasing of procurement of energy, while in quarter one 2025 we are not having this, but still we are quite happy and confident about the evolution of our acquisition of energy and our results. Moving on next, we have the business of supply. On the business of supply, we should mention that for the first quarter we do have a minor negative result compared with quarter one 2024. This is mainly related to two things. One of the things is related to the limited recognition of the energy market costs, and which, as we have explained, affected us also last year. And then we have also an effect derived by the financial result, with a negative impact of 7 million RON. In terms of financial results, as Alexandru was mentioning, we are expecting a significant reduction in the yearly interest costs, with the new syndication being accessed. And then the other aspect to be mentioned is that for the second part of the year, once the second transport scheme is finalized, we expect a pressure on getting this finance, and so the aspect of the supply subsidy will decrease, and this can be also seen in the evolution of the net debt. As you see, this is decreasing compared with the end of the year with 200 million. Moving to the next slide, we have the details about the market context for electric gas from Lauder in the total market share, but also in the competitive market. We are on the first rank at the market share, and on the competitive market we had we are on the podium third rank. You should mention that the hierarchy also changed by the fact that the PPC market supply companies, so that's after for them in terms of only one company. Now moving to the next slide, these are the details about the aspects of supply. What I would like to just point out is that in terms of quantities supplied and in terms of levels of consumption basis, you could see that we are quite stable. Basically, we are conserving our portfolio. It's not a matter of losing from our portfolio, and either we use it on competitive investment services or to find a lot results market. Also, if you compare electricity volumes and electricity revenues, you see that the proportion are pretty much similar in terms of competitive investment service and supply of last results. Next slides are summarizing the financial impact of the electricity market perspective evolution. I would go to the slide 24, the one with the graphs, and I would point out the evolution of the prices of 2024 and compare with 2025. What we can see is that this year started with some higher prices on the day-ahead market. This is basically mitigated from our point of view, but the fact that we have a significant proportion of energy we've already purchased as prices are, which are clear and honestly, and the evolution of the day-ahead market. And then you can see that on the balancing market, things have come down. For January, we have a price which is significantly lower than the price for the balancing market for last year. And even significantly down than the average price for the day-ahead market. So the issue related to the balancing market prices that affected us and all the supply companies last year is coming down with this year. Okay. We'll ask for 1 minute break. Apparently there is a communication issue.
Ladies and gentlemen, thank you. We apologize for a small holding. We will begin again shortly. Thank you. Ladies and gentlemen, thank you for holding. Management, please proceed.
Do you hear me?
We can hear you. Please proceed.
That's okay.
Yes, we can hear you. Please proceed.
I guess you don't hear me, huh?
We can hear you. Please proceed.
Okay. Thank you. So moving on from this slide 24, we will make analysis on the supply on slide 25 in respect of the evolution of the receivables analysis. In terms of receivables analysis, so we have an increased amount of receivables, which is mostly related to the fact that accordance to law 216/24, we are obliged to cancel, reverse all invoices which were issued at the end of last year and re-invoice them without the adjustment component. And this process, as explained also in terms of the financial results at the end of the year, was lengthy and was basically completed only in mid-February 2025. So basically, the receivables increased not because we have a problem of collections from the customer, but because we needed to cancel the invoices, reverse the invoices, and reissue them, which is a process which took time. In terms of IFRS 9, most of the amounts which are included in the respective analysis of the capital allowance is related to procedures which are old, which are older than 5 years, mostly litigation insolvency, so there is not necessarily any issue about collecting from the customer. Moving to the next slide, one word on the electric after subsidiary. Here we have a quarter one result with positive results compared with last year. There is a minor profit of RON 1 million. This is aligned with the efforts that we are doing there to get contracts and benefit of this evolution of the power plants and in the market. There is a competition there, and we are trying to get out of this market. Moving to production segment. Production segment is in development. We are having good evolutions in terms of making the steps to commissioning and beginning the production for some of the plants. For the full branch of photovoltaic park, it was completed in October, and it's connected to the national electricity system during the trial period according to the regulation. Then we have also Mare 2, which is in the final phase of execution to be entering the trial phase also in the future. Basically, for all the 5 projects, we are having a calendar with detailed elements related to commissioning in the next 2 years. Authorization of construction for all of them during the bidding process for the EPC. In terms of the result is still a negative result, mostly because of the fact that this is a part of startup, which we are continuing to invest in the various other projects, although we have already production for part of them in trial for finished production in commissioning stage. There is a 4.7 million adjustment related to different facts from the moment in which we merged the SPVs, that is Electric Energy, Verde, and Estee, and Estee in Elsa. So this is why it shows this negative result. Next slide, in terms of global liquidity, we have very comfortable position of liquidity, which is related also to accessing the new loans from EIB, but also about the improvement of collection. We have a positive level of cash of 865 million, which was never achieved since the vaccine is in place, and since we are having to finance the support scheme. We are continuously monitoring this and focusing on improving and optimizing the liquidity, including to the effort of having that syndication signed, which I believe was one of the most rapid syndication signed in this market and one of the largest. Then you have the detail about the distribution of dividends. We can increase the dividend per share compared with last year, and on the annex related to main conditions. I will stop the discussion now and ask for your questions.
Ladies and gentlemen, please note that for those participating via the podcast, kindly follow the instructions indicated and either type your question via the box or dial into the audio conference. At this time, we will begin the audio and answer question session. Anyone who wishes to ask a question may press star followed by 1 on their telephone. If you wish to remove yourself from the question queue, then you may press star and 2. For those participating in the questions and answer session, please use your handset when asking your question for better quality. Anyone who has a question may press star and 1 at this time. 1 moment for the first question, please. The first question comes from the line of Andrei Ioana with Alpha Romania. Please go ahead.
Good afternoon, and thank you for taking my questions. I will start my first question regarding the potential cash inflow from state subsidies. When and what amounts do you expect to collect? Is there a deadline for collecting all the amounts due? My second question is regarding the trade receivable situation. Where do you consider a reasonable trade receivable position? I understand the reasons for which it was high at the end of the year and the first quarter. What to expect next? And my third question is regarding the CapEx plan for the production side over the next 5 years. What amount should we look at? And what is the amount financed via EU funds? Just for the production side, please. That's all from my side.
Just so let's take them one by one. In terms of subsidies collection, I'll put it a little bit in perspective. If you look historically, out of RON 7 billion we have asked until now on the scheme, we already collected some 6 billion. If you look historically at the last 2 years, we have collected roughly approximately RON 2 billion each year. For this year, until the date of this financial situation, we have collected 200 million RON, which are expected there. There is another one, roughly 150 million RON that is collected in the meantime. And basically, we are considering that once the support scheme is ending, we'll probably get to the end of the year, of this year, with a decreased amount of subsidies, which would be probably roughly half of what we had at previous end of years. Most realistically, probably the whole amount will be cleared during next year. We will go through during next year. There is this mechanism that is now in place for all the suppliers, in which we are doing reconciliation and regulation of the amount. From this amount, most suppliers will ask for additional amounts to be reimbursed, and probably, in a nutshell, subsidies at the end of the year to be half of what it has been in the previous end of year, and then with the rest to be collected next year. In terms of trade receivables, I don't have any other issue in terms of normalizing the amount, unless there are other changes from the authorities and the regulator which will ask us to delay the invoicing. Because in all this history of the 3 years until now, the only moment in which we piled up some trade receivables was in the moment in which, for various reasons, we needed to stop invoicing. We needed to implement a new algorithm of the support scheme, or to cancel some invoices and reissue them, like it was the case at the end of the year. But otherwise, we are quite confident in terms of our process of invoicing that this is not creating an issue, and should have normalized amount of collections. In terms of CapEx for the 5 years for the production, we don't have, usually we don't make the publicity of plans forecast more than the annual budget. Probably more communication on that will be later on when we look at financing this through some form of market instruments. The idea is, the capacities, you have this in our presentation. You can be sure that we are negotiating as tight as possible for the EPCs, so I guess you can make the calculation by yourself.
And if I may, regarding the EU funds, are there any funds available for the production side?
Can you please repeat, because it was very high in the didn't hear it.
I was asking if you can mention the funds. Are there non-reimbursable funds for the production side?
What are the amounts that we expect as funds as non-reimbursable?
Yes, just for the production side, not for the distribution.
Yeah, just a sec. We are speaking about, it's not a check, which is just on to amount on the project.
Yes.
Because the projects are ongoing, but we have not drawn any non-reimbursable funds. So you want a flavor of the amount which we are about to.
Yes, okay.
Okay.
Ladies and gentlemen, there are no further questions at this time. Audio questions. I will now pass the floor to electrical management. Thank you. Can the management hear us?
Let's go to the written questions, and then I'll get back to you with the calculation that I'm finding now from the... No, get 8 million euros is roughly the amount for the non-reimbursable funds for the project under the generation, including batteries. This would be to be collected in the future. Now, moving to the question. First question is from congratulations for the results. I have several questions. Would you consider the results in the distribution above RRR? Are there any negative corrections to be made in the future coming from quarter one? And then there is also what are the main challenges in supply. In terms of distribution, the results in distribution are good, especially due to the distributed energy. There might be negative corrections in the following year if the annual distributed energy will be higher than the one which is approved in the state. In terms of the supply, how to make the supply profitable, the problem of stability of supply is a problem of the entire industry. Supply. Do you hear me?
Yes, we can hear you.
Okay. So, the results of the supply would be helped by the liberalization of the market, so getting out of the support scheme. This will contribute to the increase of profitability because we will be not having the issues related to non-recognized costs which are not recognized, especially the costs related to the balanced market, and this cannot be higher in the field of companies. The next question is from this year. Thank you. For the presentation. Can you comment on what you expect to be the impact of the liberalization of the market on the maintenance, distribution, and supply? How much of the network losses is already contracted for which periods and if possible at which prices? So, in terms of the prices for the network losses, we have roughly 50% of the funds which is contracted. The price is roughly around €100. Comment on the effect of the liberalization on the market on the two main segments. For the supply I have commented before, we'll see the positive result. On the distribution, we don't really see any impact. The market has been stabilized. prices at which were acquired energy are already in line with the market prices, so we don't necessarily see any impact on the distribution. Further, in fact, we see that the performance of our distribution is very good. Also last year, also quarter one this year. It should also be mentioned that for distribution we have a sustained project base of investment, including more than 400 million euros for youth funds. So 150 before non-reimbursable funds. Today, how this is business after 1st July 2025 in terms of margin? Can we hope for positive result in the tournament? As we mentioned before, and considering the budget that we have approved for that segment, yes, we are counting on a positive result for the segment. Half business in the supply, the margins are not very, very generous, but we expect it to be profitable. Then we have a question related to green bond issue. Yes, as you mentioned, we had this approval of the green bond issue in the second part of last year, at the end of last year, up to 500 million euros. And this is something that we are looking at with attention and interest and monitoring the market conditions. But if and when we actually do the bond issue, the commercial parameters, it very much depend on the market conditions. You see that we had significant volatility in the last couple of months. So at that moment we will be more clear, and as always, when we have anything to announce, we will announce it. Okay, one more question in the audio, I understand.
Yes. The next question is a follow-up question from the line of Andrei Ioana with Alpha Bank Romania. Please go ahead.
Hi, I wanted to ask you if you can give us an update regarding what's expected from your participation in Electrica. Is something happening there?
Yes, thank you for the question. We are working with our partners in order to secure the business lines that we got approved for. So as soon as we have any news that are worth mentioning, we will for sure keep you posted. We're currently doing the operational part, the feasibility studies, consultancy and so on, in order to get things actually moving, and we hope that we will have really quick results on this.
Okay, thank you.
Ladies and gentlemen, there are no further questions at this time. I will now pass the floor to Electrica management. Thank you.
We have one more question. The 500 million euro in distribution are not reimbursable funds are related to the next 5 years. Yes, they're related until 2029. Is there any more questions, either audio or written?
There are no further audio and written questions. The floor back to you.
If not, we are as always available. If you want any more details, you can email us, contact us, and we'll be at your disposal in order to answer any questions that you might have. Thank you so much, and I'll pass it back to Raluca.
Thank you everyone for joining us. We are here. You can reach us on email, on phone. Whatever questions you may have, we are here to answer them. As we said before, the recording will be posted tonight or tomorrow morning, and the transcript as soon as possible as well. Thank you for joining us, and have a great rest of the day. Bye.
Ladies and gentlemen, the conference is now concluded, and you may disconnect your telephone. Thank you for calling, and have a good